All right, today's going to be a little bit a different daily diary. Today we're going to talk about some movement in the market and what we're doing to really take advantage of the movement that we've seen. So, over the last couple of days, we've seen some of the stocks that we have been following and investing in take some hits, but they weren't stocks that, I guess most of the stocks I'll say, were ones where we really just surrendered some of our losses, which is totally fine. We're in a short term thing anyway. So I was going through this and I kind of had the idea that this was a really cool opportunity to, well, let me back up. Instead of having the assumption that every single day we're going to make $2,000 or $1,000, and those days are nice, really the idea is we have two goals in here. Number one, we want to increase our returns as much as possible. And number two, by doing that, we want to keep our cost basis as low as possible. And that's just an accounting term. It means you just want to keep the price you pay for a particular stock as low as you possibly can. So when you have days where the stock does really well, that's great. But what it does is it raises the price of the stock. And so if you end up buying more stock, you have to pay more for it and you reduce your percentage return. And so the big picture here is we're trying to get as close to investing as much as we can toward the bottom. Now, the big question that people are going to ask is where is the bottom? And if anybody tells you they know, well, either one, they're lying to you, or two, they just got out of a DeLorean and they're time traveling, in which case that would be my best friend. So what we want to do is we want to take advantage of opportunities where we can actually um, take days where the stock market goes down, when 1,000 points down today, and actually use that to actually firm up our position. And today was a great opportunity to do that. So what I decided to do was I created this spreadsheet. This is brand new. I literally just created this today. And so we'll just bring this a little closer. And this just kind of visualizes kind of what we are looking at. All right, there we go. So I basically put the cost basis, how much we spent for an individual stock. And this is basically everything that I own in my portfolio. The number of shares that I own, the cost, which is basically just A times B, basically. That's the total cost spent. What the current price is, and based on our portfolio, so the total cost is what we spent to get the stock, and then based on the current price, what our current value is. So we're down about $600 as a whole, but that's a little misleading. So the ones in the black were positive, and then the ones in the red were not. So what we want to do is we want to take a look at some opportunities to firm up our cost basis. So one of the things that I did today is I took a look at this stock, VKTX. And they are a biotech company, and I bought them because they basically have a drug that's about to come out, and as long as it passes toxicology, then they should be loaded and ready for bear. But I don't really have it in my heart. So what I did was I decided to put a limit order right here for all the stock, and some of it came through, as you'll see here. 44 shares were done, and I put a limit order at 450, and some of them are left over. So we still have 312 left over. And the idea to do that is basically to take the gain that I have from this stock and to free up cash. So at the end of this, we added, $200 here, and we'll add another $1,400 when it hits 450, which it will do. And it gives us kind of more tools to play with. Beyond that, I took Venom, which is basically an energy company, and I did a limit order on that for $7, which is really cool because it hit $7 and then went right back down to 680, and I freed up $600 here. And then CNK is Cinemark, and that is a movie theater chain. So I put a limit order in on that for $825, and sure enough, it hit $825, and I freed up. Let me get rid of these hashes here. I freed up another $1,400. So at this point, one of the things that I want to do is I want to take a look at, and those are the ones that I basically cashed today. They're the only ones I've sold ever. I've kept all of these up to this date. So from here, one of the things I did is I decided I want to take ones that I knew would have a gain on them that I wasn't married to, um, and figure out what I want to do with that. So, number one, Adro. This is one that I bought like, geez, a little more than a year ago, and they did really well. And then they lost a contract with Johnson and Johnson. They were up by like six, I think $6-7 a share. I bought them at like two. And this was on my E-Trade account. So yeah, I bought them at like 217 right there, somewhere around there. And so I decided, well, right now Adro is sitting at 242. I'm just picky. I could sell it right now for 242, but I decided I want a half. I want a little bit more profit, and it goes up enough. It goes up and down enough that I feel like it's going to hit 267 without a problem, which is basically just I rounded it off 50 cents a share, 600 shares. It's going to get me basically this is going to the 267 is going to clear me another $1,600. So that's going to give me more money to play with. Um, so the VKTX is going to come through for another 1,400, and then ERI, which is one that I have right here. This is El Dorado Resorts International. That's the one right here. It says my cost basis is 1206, but it's basically an amalgamation of two purchases. One I had at $16 a share, and one I had at $6 a share. So basically, it averages out at 1206. So what I decided to do was basically turn in the ones that I bought at $16 a share, which were 59 shares, and that would free up another $1,000, and that takes my cost basis from 1206 to $6, which is going to put me back in the red pretty quickly. So once this goes up from $11.90 to $16, which seems like a big jump, and it is a little bit, but I think it'll get back there. It's a little bit of a volatile area, and this has gone up and down. I've seen it go up to like 20 or 21 recently. So once it goes back, I'll sell it. I'm not in a rush for that sale to go through, but when it does, I have more money to play with. Another one that I have is IVR, and I can't remember what this company does. I'll have to look at that. Let me take a look at my Robinhood. What does IVR do? Oh, it's Invesco. Yeah, that's what it is. So it's a real estate investment trust from Invesco. They still have $2 billion in assets. So they have the naming rights to the Denver Broncos field. They're not going anywhere. They're a big, big company. So currently they're at 318. I have $214 a share, or that's what I bought it at, 318. It's sitting at 292, a little bit less than that, but not much. So I said, okay, I still want to take a profit. I will never sell a loss, ever. I will hold on to it until I am dead and they're putting my body in a casket. I just will never sell for a loss. The reason being is, while it's happening right now, if I'm a little bit underwater, that's fine. But once you decide to sell, then you are literally inking a loss. And I will not do that. So I'm going to take a little bit of a profit when it goes up to 350, which it will do, and probably in short order. Then it clears up another 750 for me. And then SSL, one of these days I'm going to totally know what all these are. Let's see. SSL is Sasol, and they do liquid fuels, chemicals, and low carbon electricity. So they're probably natural gas for the most part. And they're getting hit because Saudi Arabia and Russia are having an oil war, and they're just flooding the market with oil. So it's lowering the cost of everything, and that's kind of why you see that dropping a little bit lately. So I bought this at 195. It's currently at 188. It's roughly about, it's pretty much break even for the most part. But I really believe this is going to go up a little bit. But I want this money as fast as I can because I got $2,000 in it. So if I can take a little bit of a profit, basically just 5 cents a share, I'm going to clear $50 basically, and that'll free up another $2,000. So overall, once these come through, I'm going to have $6,750 freed up, and it's to play with because this market took a hit. So what it means is we got a lot of deals coming forward. So specifically, we're going to go to our candidate list, and then this is just a list of all the ones I have in order of my Robinhood account. Where the price is right now, where the price is on death day, that's February 20th, what the numerical difference is. We'll widen this out a little bit. It doesn't have to be so snug. and what the percentage drop is, and I sorted it. So you can see these things. Some of them have taken 87% down. And again, I own that one. We'll talk about that one. So SSL, I have a limit buy on the other screen for that one. Signet Jewelers, I don't know what to think about this one. This one, they do a lot of mall jewelry stores. In fact, let me take a look and see what are the names that we have behind those. So they do. Boom, boom, boom. Yeah, jewelry stores and malls, mall-based kiosks, off-mall locations. They had it. It was like Zales and a whole bunch of other ones. So I am not so sure how people are going to be reacting to spend money on jewelry when all this is said and done. I just don't know. I mean, you're going to see the biggest economic shock afterward. I mean, I think on one hand, you're going to see people absolutely have massive pent up in demand and they're going to go out and congregate and go to malls and concerts. That's going to explode. Things like jewelry, especially with so many layoffs, I'm just not sure where that's at. So I'm not saying I won't. I still have this on my watch list. I'm not saying that I won't do this in the future, but I feel like it might be a little bit of a trap and it might take longer to get your money back. But right now it's at 7.5 times upside, which means if I invested $100, I would get $7,500 back if it goes to its normal high that it was in mid-February. So I'm watching it, but at the same time, I'm not pulling the string yet. So CEQP, this is basically a real estate trust that we have right now. I currently have a limit buy on that. IVR, I decided to add a new limit buy. So that's the one we talked about. That's 260 right here. So we decided to throw a little bit more money at the IVR. Currently, that one is, looking at silver, by the way. So I have a vault at home and I'm thinking of loading up at silver because you just never know. All right, so with that being said, IVR at 260, and this gives me an opportunity to lower my cost basis from 318 to 260. So kind of one of the things we're looking at, especially with a 6.5 times upside that we're looking at. We have limit buys on BHR and NBLX, which we just talked about before. All right, so a couple ones, ERI, the Eldorado Resorts International. I did a lot of reading on this one. Well, currently it's at 5.5 times upside. Has 80% of the people of the analysts are recommending a buy on it, which is really good. But it's 1240, and so if you look over here, I basically have a cost basis at 1206. I don't want to increase my cost basis. So if I were to do this sometime, I might do this if I can get that. If I can get that down at maybe 11 or 10, it's possible that I would do that. But I kind of want to read the news and make sure everything's looking good for that company overall. They are. I think this was the one that they were talking about. Oh, geez, who was it? One of them, and I can't remember if it was this one or not. There was a talk about them merging with Caesars, basically Caesars casinos in Las Vegas. So actually, no, this wasn't the one. There was another one we'll talk about. Anyway, so that one I'm holding off on. I'm not increasing my cost basis, but I am paying attention because it's dropped 82%. This one I'm considering, EVRI, and that one is this is Every. Yeah, and they do casino technology. So I'm not sure if it's video poker or it could be the surveillance on it, but there it is heavily tied to the casinos. So currently they are at 225, and that's where my cost basis is. This is at 290. I would consider doing 280 just because you have 100% of the people doing it. I would make an exception and increase my cost basis for that possibly. So I'm still looking at that. I didn't pull the trigger on that. It's probably the first one I'll pull the trigger on when one of my limit sells comes in. And what a limit sell means here is that basically as soon as the price exceeds this amount, it triggers the sale. Whereas a limit buy is as soon as the price goes below this a certain amount, it goes in for a sale. So this is probably the first one that I'll go to once one of those comes through. From there, I looked at TRTX. 67% of people are saying to buy, which is okay. It's at about a 5-to-1 upside. So I'm not necessarily sold on that one. I'm keeping my eye on it though. But the one I decided to do a limit buy on, this was the one TWO. Ooh, I suppose I can capitalize it. There we go. Is, what's the name of it? I always just remember it as Two Harbors Investment. And this one has 89% of the people saying to buy it. And they do real estate investment trusts. And I'm trying to stay away from commercial right now, which is ironic because I own commercial real estate. But I'm trying to stay away from that as much as I can right now, unless I have a really good reason not to. And this one does residential mortgage-backed securities, non-agency securities, mortgage servicing rights, and other financial assets. So the reason I like this one is because you had that federal stimulus, or whatever they want to call it, bailout stimulus, what have you. And they're going to be basically covering people to make sure people don't get kicked out of their houses. And there's like 35 states that have, no eviction clauses or whatever policies in their state. So this one is going to have a little bit of a backstop from a regulatory and from the federal standpoint. So I just said to myself, okay, it's at 336, but I still want to be picky. So I put a limit order on this for 310 for 232 shares, which seems like a really odd amount, but that's what I had available in my Robinhood account. So again, once we get one of those limit sells to come in, we're going to go ahead and probably bump this number up, who knows, probably 500 to 600. So that's what we looked at today. So overall, we're basically setting some limit orders, some things that we can get if the price drops and it just works for us. We're going to reduce our cost basis overall with a couple rare exceptions. And then we have some that we're willing to take some cash on because we're not necessarily married to them. Adro is from last year. It's called Aduro Biotech, VKTX. I just don't care either way. And these ones we're just doing to reduce the cost basis because they were the higher cost basis of the two. And SSL, the same thing. It's $2,000, so it gives me money to play with. So we're gonna have about $7,000 coming to us pretty shortly. And today we sold about 2,200, and overall from those purchases from those stocks, we cleared 26%. So this is going to be nothing compared to what we do in the future. 26% sounds really good. I'm not in this for 26%. I'm in this for 500 to 600%. So these numbers are going to look very, very paltry from where we're going to be looking at the end of the year. So with that being said, if the market goes up tomorrow, then that's great because it reduces some of this red, and it'll probably trigger some of these sell limit orders. And if it goes down, then it triggers some of these buy limit orders. So really whatever happens in the market tomorrow works for us. If it goes down, we get some really cheap, good stocks. And if it goes up, we get some cash to play with, and we'll kind of find a good home for that cash. So with that being said, one other thing that we want to look at is, just open up a new window here. This is what I look at every night. So we'll do after hours, futures, either one. You could do either one. All right. So in this one, we have after hours. The Dow is looking that's going up 168. So it doesn't always mean anything. It could start going up and go down. The news happens throughout the day. It could be any number of things. But so far, it's trending up on the Dow, the NASDAQ, and the S&P 500. And the other one that we're going to look at is the Financial Times Stock Exchange. That's the one in London. And boom, boom, boom. Do we have that in here? Not sure. Let's take a look here. Let's go into my Apple investing and see if they have anything to say about that. Nope. Anyway, I'll take a look at that a little bit later. But usually if you get up early in the morning or if you're up in the middle of the night, you can see how that starts. So in fact, let's do one last thing. Um, so do futures, and these are basically just bets. People buy contracts on what they think that the index is going to be in the future, and then they make or lose money on that. So, oh, they don't like the ad blocker. Well, that's what Firefox is about. All right, so let's take a look on this. And this one looks like it's tending to go up. So tomorrow should be a day. Looks like everything's going up where we're going to see some of these get triggered, which is fine by me. If I can free up almost $7,000, I mean, that works for me. It's more money to play with. And then when we have the bad days, we can just continue reducing the cost basis, find some profits to take out, and that's where we're going to make our money. So with that being said, I will see you tomorrow.